Good morning. We're going to start now. Good morning, everyone. The start of a wonderful budget season. This is a public hearing of the Committee of the Whole regarding bills number 140, 144, 140, 145, 140, 146, and resolutions number 140, 159. I would ask that Ms. Lewis please read the title of the bills and resolutions.
Bill number 140144, an ordinance to adopt the capital program for the fiscal years 2015 through 2020 inclusive. Bill number 140145, an ordinance to adopt the fiscal 2015 capital budget. Bill number 140146, an ordinance adopting the operating budget for fiscal year 2015. Resolution number 140159, providing for the approval by the Council of the City of Philadelphia of a revised 5-year financial plan for the City of Philadelphia covering fiscal years 2015 through 2019 and incorporating proposed changes with respect to the fiscal year 2014, which is to be submitted by the Mayor to the Pennsylvania Intergovernmental Cooperation Authority, the Authority, pursuant to the Intergovernmental Cooperation Agreement, authorized by an ordinance of this Council approved by the Mayor on January 3rd, 1992, Bill number 1563-A, by and between the City and the Authority.
Thank you very much, Ms. Lewis. Today we begin the public hearing on the Committee of the Whole to consider various bills read by Ms. Lewis that constitute proposed operating and capital spending measures for fiscal year 2015, a capital program and a forward-looking capital plan for fiscal year 2015 through fiscal 2020. We will hear testimony from the administration today on the 5-year plan, and I would ask our good friend, Mr. Gillison, and his team to come forward.
Good morning, Council President Clark and members of City Council. I am Everett Gillison, Chief of Staff in the Office of Mayor Michael A. Nutter. And on behalf of the Mayor, I am pleased to provide testimony on the proposed fiscal year 15 operating budget and the proposed fiscal 15 through fiscal year 19 5-year financial plan. With me today are Rob DeBoe, the Chief's Finance Director, and Rebecca Reinhart, the City's Budget Director. A number of city officials are also in the audience. In a time of continuing limited resources, the administration is faced with important choices about how to invest taxpayer dollars. This 5-year plan makes clear our priorities. Our goals are to ensure that every resident lives in a safe community and has opportunities to obtain a quality education, live a healthy life, that Philadelphia becomes a place of choice for businesses to start, stay, and grow, that Philadelphia becomes the greenest and most sustainable city in America, and that our government makes efficient and effective use of taxpayer dollars and responds to the needs of residents and businesses. This plan makes investments to fulfill these goals. Among the ways we will pursue these goals are as follows. Advocating for increased funding for education through the passage by the state of a cigarette tax as well as the passage of a split sales tax in council between the city's pension plan and the district. Providing modest funding increases for investments in our neighborhoods, libraries, and recreation centers. Reducing wage and business taxes to spur job growth. And setting aside significant funding for the recently agreed upon contract with AFSCME District Council 47 and future labor agreements that are fair to both employees and other taxpayers by pairing raises with essential reforms that will strengthen the health of the city's pension system, making common sense changes in overtime rules, and providing the ability to use temporary layoffs instead of laying off employees permanently should we face future financial distress. We are also proposing a substantial investment in the city's pension fund by dedicating the proceeds of the anticipated sale of the Philadelphia Gas Works to the pension fund. At the same time, the administration will continue to invest in public safety and higher education, both essential to the growth of the city. After weathering the recession and its fiscal impact, the city is seeing its tax receipts grow moderately but unevenly as new residents move into the city and businesses continue to invest and create jobs in Philadelphia. We must keep this progress going. In a time of continuing limited resources, the administration is proposing to make some modest investments in the services the city provides. Even with just these modest investments, fund balances of $50 million in fiscal 15, $24 million in fiscal 16, and $30 million in fiscal 17 are very low compared to the Government Finance Officers Association's minimum fund balance recommendation, as well as city's target of maintaining a fund balance of roughly 6 to 8% of total obligations. The challenges posed to the city's finances are illustrated by the weakness in the wage tax, the city's largest source of tax revenue. Wage and earnings tax revenue was originally projected to grow at a rate of 3.59% in fiscal 14, but based on growth year to date, it is now projected to grow at 1.75%. That slower anticipated growth means that collections for fiscal 14 and fiscal 15 are now projected to be a combined more than $60 million below the amount projected in the fiscal 14 through 18 five-year plan. There are also threats to the city's property tax collections projections. The exact amount of growth in these collections will depend on the pace at which appeals are heard. There were over 23,000 appeals of the new assessments. Plan assumes that these appeals will be all resolved by the end of fiscal 15. Since under the new legislation, taxpayers who appeal their assessments can pay the amount they owe in fiscal 13 without paying any interest or penalties until their appeal is resolved, the plan assumes the city will continue to receive the old amount of tax revenue until the appeals are resolved. If all of the appeals are not resolved by the end of fiscal 15, the amount of property tax revenue that the city and the school district receive will be lower than fiscal 15 than the plan projects. Despite these threats to the city's revenues, the plan includes some significant investments. The largest single investment is in labor. The five-year plan invests $376 million in future labor costs to pay for the provisions in the recent agreement with the ASME District Council 47, as well as other future labor awards. In order to address the long-term challenges presented by growing benefit costs, particularly health care and pensions, the administration couples pay raises for the workforce with proposed changes to bolster the health of the pension fund, control health care costs, and make common sense changes to overtime and to reduce or eliminate the need for layoffs during future economic crises. These changes include introducing combination pension plans with defined benefit and defined contribution components, increasing employee contributions to pensions, and moving to self-insurance for health benefits and increasing copays. In order to reduce or eliminate the need for layoffs in future economic downturns, the city has also sought the right to use temporary layoffs when economic circumstances warrant. The city is also seeking to mitigate overtime costs through changes in overtime rules. As the agreement with DC 47 demonstrates, the administration is committed to having a reasonable collective bargaining agreement that is fair to both workers and other taxpayers. The plan also assumes additional investments in education. The plan shows funding for the school district that is consistent with legislation that has been enacted either at the state or local level. Per state legislation enacted in 2013, the plan reflects the following changes to the sales tax. The sales tax rate will remain at 8% starting in fiscal 15, and $120 million of sales tax revenue will be transferred to the School District of Philadelphia. The remainder must be directed to debt service on deficit borrowing, roughly $15 million annually for 4 years, by the city for the school district and the city pension fund. However, City Council President Clark and the mayor have signed a joint letter requesting that the state enact legislation that divides the sales tax revenue between the school district and the city's pension fund on a sliding scale, with the district getting 85% in fiscal 15, 75% in fiscal 16, and 50% each year after that. The letter also stresses the importance of pairing that reallocation of the sales tax with the state authorization for the city to impose the cigarette tax that was enacted locally last year. And while we must work towards this end in the General Assembly, we must also work together locally to pass our own legislation reauthorizing the sales tax. The proposed 5-year plan includes tax reform to make Philadelphia more business-friendly and encourage businesses to locate and expand in Philadelphia, increasing jobs over time. The fiscal 15 budget includes the continuation of the wage tax cuts, which were resumed in fiscal 14. While the pace of the wage tax reduction is slightly slower in fiscal 15 through 19 plan than the pace that was in fiscal 14 through 18, the value of the wage tax cuts totaled $166 million over the course of the plan, on par with the cuts in last year's plan. The proposed cuts bring the wage tax and the net profits tax down from 3.9240% in fiscal 14 to 3.7460% in fiscal 19 for residents, and from 3.4950 in fiscal 14 to 3.3365% in fiscal 19 for non-residents. Additionally, tax cuts will be made to the net income portion of the business income and receipts tax to bring the tax rate on net income down from 6.43% currently to 6.25% by fiscal 19. A series of structural tax reforms sponsored by City Council will also lessen the tax burden, particularly for new and small businesses. These reforms include provisions to make qualifying new businesses that meet certain hiring requirements exempt from the business income receipts tax for the first 2 years of operation and exempt for the first $100,000 of gross receipts and $50,000 of net income exempt from tax. These reforms waive license and registration fees for new businesses. It creates tax credits for each qualifying new job for certified sustainable businesses and limit the net income tax to just Philadelphia-based sales rather than a business's sales, property, and payroll. Together, these taxes and reforms will help make Philadelphia a place of choice for businesses to start, stay, and grow. The largest single change in the fiscal 15 budget is the inclusion of a $700 million appropriation related to the use of proceeds from a potential sale of the Philadelphia Gas Works. While the sale will have no net impact on the city's fund balance, it could have an enormous impact on the city's pension fund, allowing a deposit of at least $400 million into the fund. An analysis by the city's actuary shows that a deposit of $400 million would cause the pension fund's funding ratio to increase to 77% by fiscal 30, compared with roughly 70% without the PGW sale proceeds. At the same time, the agreement with UIL, the potential purchaser of PGW, protects ratepayers and PGW employees. The fiscal 15 budget also proposes a number of modest new investments. $2 million is proposed for the Department of Licenses and Inspection to hire additional inspectors to strengthen demolition controls to ensure safe public and private demolitions. An additional $2.5 million is proposed for the Free Library to provide 6-day service at all branches through the city. Currently, most neighborhood branches only offer 5-day service. There's $1.2 million proposed for the Sheriff's Office to hire 30 additional deputy sheriffs needed for the new family court building. $1 million is proposed for the Office of Supported Housing to continue compensating for federal sequestration cuts. $500,000 is proposed for the newly created land bank to fund one-time startup costs. $1.9 million in additional funding is proposed for the Office of Property Assessment to fully fund the maintenance of property assessment function. $2 million is proposed for the Office of Fleet Management to replace aged and unreliable vehicles in the police and other operating departments. An additional $3.3 million for the Office of Innovation and Technology is proposed to fund operating costs associated with significant technology upgrades occurring currently in the city and to fund the one-time 1.5 data center cooling system upgrade. $500,000 is proposed for Parks and Recreation to fund expanded programs at recreation centers in neighborhoods throughout the city. $500,000 is proposed for the Mann Music Center to fund continued operations at this important cultural institution, and $500,000 is proposed for the Community College of Philadelphia to help offset tuition increases. The proposed fiscal 15 general fund expenditures total $4.49 billion, which is a $496 million increase, roughly 12.4%, from fiscal 14 estimates, primarily as a result of the expected one-time appropriation of $700 million to the pension fund from the proceeds of the sale of the Philadelphia Gas Works, somewhat offset by the completion of the $108 million pension deferral repayment in fiscal 14. The elimination of over $69 million in one-time back wage health care costs in fiscal 14 associated with the withdrawal of the appeal against the 2009 International Association of Firefighters Local 22 Award, the elimination of the one-time $29.2 million of sale proceeds from the sale of the Love Park Garage, and the elimination of the one-time $45 million pass-through for the payment from the state to the school district in fiscal 14. Excluding these large one-time items, expenditures are budgeted to increase by $47 million, $29 million of which is due to rising pension and debt service, thus leaving the remaining $18 million, which represents an increase of only 0.5%. Proposed expenditures in fiscal 16 are $3.84 billion, increasing to $4.026 billion in fiscal 19. As I conclude, I wanted to just highlight a few changes in this year's 5-year strategic and financial plan. Key among them were first discussing the operating budget trends for 37 departments and performance trends for 31 departments, compared to 36 and 27 respectively in last year's 5-year plan. Secondly, this plan featured results from the pilots conducted on a program-based budgeting and return on investment analysis for capital projects. These changes were made in anticipation of a move towards program-based budgeting, which will hold departments accountable for delivering against the total resources that they receive and more closely tying budget decisions to performance. We look forward to working with Council as we implement program-based budgeting and a return on investment analysis for capital projects. The proposed budget and 5-year plan seeks to preserve the city's core services while making Philadelphia a safer, smarter, healthier, greener city where people want to live and do business while operating efficiently and effectively as a first-class city. Thank you for the opportunity to testify on behalf of the administration regarding the fiscal 15 proposed operating budget and proposed fiscal 15 through 19 5-year financial and strategic plan. I have with me the senior officials of the administration, and with their assistance as necessary, we will be happy to answer any questions you might have. Thank you, Council President.
Thank you, Mr. Gillis, for your testimony. Just have a couple of questions to start. Page 42 of the 5-year plan, it references the DC 30 contracts and 47 contracts, and I actually made this issue, made a statement in an earlier press conference or maybe to the press about the revenues and the terms associated with 47 not being reflected in the offer to 33, the last
offer that we made about a year ago.
So my question is, and I said this earlier, that I would think that at least from a increase in raises, benefits, that should be the minimum offer to 33. I don't get to have that conversation because I'm a member of the legislative branch and not the executive branch, and I clearly understand that. But as an interested outsider. Have you done an analysis internally, because I now understand why you wouldn't do that publicly, if the terms and conditions as it relates to that particular aspect of the contract were similar to 47, how would that reflect, or how would that appear in the budget, given that you haven't appropriated the amount of dollars to reflect that increase in salary and benefits?
I will start off, and I'm sure that Rob or Rebecca can actually reflect, but the answer to I think the primary question is, have we done that internal analysis? The answer is yes. How does that end up affecting how we do our labor discussions? We at least like to know what the facts would show and be able to make our decisions and what would have to be adjusted going forward if that were just a apples to apples, this is what you get one way or the other.
Right.
So we know what the facts are. The question is in negotiations, and I think that I've heard that not only from your question, but I think I also heard it from Mr. Matthews that said 47 is 47, 33 is different. And so we're at the negotiating table to see exactly what's going to come out of it at the end. And I think that's the only thing I can say about, we understand what the impact would be, but we would have to take it as, once the contract negotiations have concluded.
Right. And normally I wouldn't ask that question as in a formal way, but we are now dealing with the budget.
I understand.
It's a very formal process, and the reality is, if in fact you come to a consensus on those terms with 33 that reflect the 47 terms, there will be a change in this budget, which is before us now. So I'm a little concerned about, one, not concluding that contract. So as we go through this budget process, we don't end up at the end of the 6 or 7 weeks, however long this will take, and have to make a significant adjustment without understanding how we actually pay for that. So I say all that to say that, and
I understand.
I know that you would love this to happen also, is that we conclude that contract as soon as possible, so we can get to a real budget.
I think you understand my glee would be bar probably only a few other people, but I would love that to be part of what we're trying to get done.
All right, thank you, sir. I had a couple, 2 questions about the potential sale and the dollars associated with that. In page 6 of your testimony in the FY15 budget, it talks about proceeds of the potential sale that might be equal to $700 million net. Is there a particular reason why we're using this number in that aspect of the budget process?
That number is really just a placeholder. We understand that won't be where the number winds up. At the time we were putting the budget together, hadn't really completed our analysis of what the deposit to the pension fund would look like. Mm-hmm. So I think if we get to the point where the deal is approved, that number would be adjusted.
Okay, so you anticipated my next question was in the actuary, you talk about a $400 million deposit.
Right.
Correct.
So
Yes.
I guess that's a conservative viewpoint.
That's right.
Yes.
That's, yeah.
Okay.
There's a range, and that's kind of, we think, at the low end of the range.
Okay, all right. Does this particular 77% possibility in terms of the pension fund, would it include the sales tax revenue?
Does not. That's
does
just
not.
the PGW deposit.
Okay. So,
The PGW deposit, and then not reducing back to the MMO.
okay. So what would be the 2013 if we got the sales tax revenue?
2013 or 2030?
2030, I'm sorry.
So the sales tax, the way it is in the legislation, gets us to 80% at 2030. So this would probably add another, 6-7%
You're
to
talking
that.
about the state legislation?
Yes.
And what?
With a 50-50 split,
All right.
you get to 89% funded in 2030. So if you add this in, you'd be probably in the mid-90s.
So we'd be much better off with the sales tax with and without the PGW sale.
Yeah, we'd be better off with the sales tax and even better off with the sale.
We'd be like awesome with the PGW. The PGW sale would be like jumping up and down on the roof of City Hall. Right?
I don't know that I'd go that far, but it would be much better than where we are now.
Okay. All right, I just wanted to calculate those numbers. Okay, I'm going to defer to Councilman Good at this moment.
Thank you, Mr. President. After labor costs and the potential PGW sale, I guess the next major item is contracts, which accounts for maybe $4 billion or more over the 5-year plan. So I'd like to turn my attention to questions of OEO. You can have OEO come to the table.
Sure. Angela?
Good morning.
Good morning, President Clark and members of council. My name is Angela Dow Burton. I'm Executive Director of the Office of Economic Opportunity.
Good morning, Ms. Dow Burton. How are you?
I'm very good, thanks. And you, sir?
I gave up arguing for Lent season, so I'm hoping that we can have a civil conversation about the numbers and just the numbers.
I think that would be fantastic.
On page 128 of the 5-year plan, it states that OEO continues to increase participation of disadvantaged businesses, that the rate has been holding at 28%, prompting the mayor to increase the goal to 30%. Is that consistent with the latest disparity study?
The latest disparity study is under development. That's for fiscal year 13.
If the latest disparity study is under development, then the disparity study before that is actually the latest disparity study.
Okay, so for fiscal year 12, the goals in the disparity study were 25%.
Okay, so that is not consistent with the latest disparity study.
That's correct. It's more aggressive.
Okay. What were the actual participation rates from fiscal year 06 to fiscal year 12 according to the latest disparity study?
I do not have the full disparity study in front of me, but I do have a page that you provided me, which is page 12. That's Roman numeral 12. This reporting of activity shows the actual and recommended MWDB utilization for city contracts and federal funded contracts are included.
My question was,
so-
what was the actual participation rates from fiscal year 06 to fiscal year 12 by year?
For all MWDBEs, and I will again say this includes federal contracts which are, have lower goals than the city of Philadelphia. Theirs is about 13 and ours was about 25 during this time. Fiscal year 2006 participation was 23.6, fiscal year 7, 22.3, fiscal year 08, 19.2, fiscal year 09, 19%, fiscal year 10, 20.8%, fiscal year 11, 23.3%, fiscal year 12, 22.5%.
The rate was higher in fiscal year 11 and then dropped in fiscal year 12,
Yes.
and so it decreased.
On this chart, it decreased.
This is your chart. You paid for the study, and
What-
you distribute the study.
And what I also paid for was a page that is not shown here, which includes the adjustments to participation that takes out the cost for few and no, and it does not account for federal contracts, which depress our numbers. That's what I paid for.
These numbers are your numbers, and they are the actual participation rates, unless you have something else you can present today.
Well, Councilman,
But I won't even ask you for specific numbers. I'll ask you just a real direct question. Did participation drop from fiscal year 12 and fiscal year 11?
no, it did not.
Give me the numbers.
I will be happy to, if I can get a copy of the fiscal year 2012 annual disparity study.
So you don't know?
I don't have it with me, but I will tell you that the
What you
participation,
have before you is
The-
a document that comes from your disparity study.
the
So there's nothing wrong with these numbers here. And I'm not arguing the numbers. And you can present whatever numbers you want if you have different numbers. These are your numbers that you paid for, which say that from fiscal year 12, from fiscal year 11 to fiscal year 12, participation decreased. Just asking if that's true.
and I'm saying it is not. I recollect the participation for fiscal year 11 being around 26% and fiscal year 12 being 28%.
This is your disparity study. It
That's
says something
correct.
different. Okay. Well, we're going to get to why it says what it says. So from fiscal year 6 to fiscal year 12, what was the highest year in terms of participation?
On this report, it's showing fiscal year 2006.
So fiscal year 2006, during the street administration, the first year in which we began to conduct annual disparity studies, that was the highest level of participation.
And that is not what our numbers show.
These
I
are your,
really- I
these
take
are
it-
your numbers.
I take exception to the fact that this is one page out of a 160-page
Then you should have brought your own
document.
numbers.
And I would have if I had known our focus would be at the 5-year plan on the disparity study.
Okay.
I will bring it to
No, we're
the
going to finish.
testimony.
We're going to finish this now, and you're causing me to lose my religion for a second, but the Home Rule Charter, the Philadelphia Code, the Mayor's Executive Order, a 2010 City Solicitor's Opinion, all say that the annual disparity study is what counts. In fact, it has to be what counts, because that's the only thing that makes what we do in terms of economic opportunity legal. We can't do any of this. The legal framework for it starts and ends with the disparity study. So the reason why you're disputing the numbers is because you changed the math. Is that correct?
Yes, I provided a more transparent model that takes out the transactions where we have few or no minorities, and we identify those categories so we can drive the market for those who are interested.
Okay, so you took out
And-
about $150 million worth of contracts. Does that sound right?
No, it was closer to 117 for this year.
I'm not talking
And
about this, I'm
100,
not talking about for this year. I'm talking about fiscal year 12.
it was 108 million for professional services and 53.5 million for service supplies and equipment.
About 20% of contract dollars you took out of the equation.
Yes, and increase the level of participation on the remaining contracts.
So the reason why you reached what you say is 26%, or reach 26%, and the reason why you say you can reach 30% is because you're not counting all the contract dollars. You're counting about 80% of the contract dollars. Is that correct?
I'm counting the contract dollars where we can have participation.
Okay,
If you look at,
if you
if you
counted
look,
all the contract dollars, what would the participation rate be?
Councilman, let me just highlight an example for you.
I don't need an example. I need to know,
Well-
if you counted all the contract dollars, what would the participation rate be?
I don't have that number. What I do
That
have is
number
an
would be-
understanding
No, that number
that-
would be, that's a simple, basic question. We're going to finish this in an organized fashion. This is dealing strictly with numbers. If you counted all the contract dollars, what would the participation rate be?
Let me suggest to you that if the previous administration counted all the contract dollars,
It's a number.
They
It's-
would
it's an
have
actual-
included-
It's an actual number.
the contract dollars for
Are you
electric
listening?
supply.
Are you listening? It's an
I'm
actual
listening
number.
to you, and I'm trying to answer your
No,
question.
you're not trying to answer my question.
Which-
If you counted all the contract dollars, what would the participation rate be?
I'm looking at the contract dollars that actually apply to participation. And I'm excluding electric supply, which was never
You're
included.
not going to answer the question. I'll give you the answer. If you count all the contract dollars, the answer is 22%. The answer is 22%. If you only count 80% of contract dollars, that's how you get to 26%, that's how you get to 28%, that's how you get to 30%. But if you count all the contract dollars, your actual participation rate is 22%. On page 135 of the 5-year plan, it says the 25% goal has been exceeded for the 3rd consecutive year. That's
Yes.
not true. If it were true, why would the disparity study then say after fiscal year 06, 23.6%, 07, 22.3%, 08, 19.2%, 09, 19%, fiscal year 10, 20.8%, fiscal year 11, 23.3%, fiscal year 12, 22.5%. Then for the next 3 years, it recommends a goal of 25%. You know why? Because it counts all the contract dollars. Is that correct?
No, it is not correct. And
Are
I
you-
will
are you
say,
serious?
if you will allow me to explain, I'll share it with you.
No, I'm
We,
asking-
for the
I'm-
first
I'm asking a
time,
different question.
we are,
I'm asking a
I
different question.
would like to answer that first.
But no,
We-
because the simple question was, does it count all contract dollars? If you're going to say no, then just say no.
And I'm going to say to you, we've never had a participation report that counted all the contract dollars. And when I say all the contract dollars, I'm talking about
You
the,
didn't answer my question. I'm going to finish this up real quickly. When a 25% goal was set, everyone who's looked at this issue, period, knows about a 25% goal, knows what it's supposed to be based upon. Was it based upon 100% of contract dollars, or was it based upon 80% of contract dollars?
it was based upon those contract dollars where we could get participation. Included in the numbers that we have as few and know are electric supply costs that range from $34 million in 2013 and $52 million in 2013. We do not
When you
have
set a 25%,
minorities or women who sell
when you
those
set a
supplies.
25% goal, what was it 25% of?
It was 25% of those dollars where we could attract participation. And if you look at the details for fiscal year 6, 7, 8, and 9, you will not see the
Are there
electric
actual
supply.
numbers? Are there
and-
actual numbers that it applies to?
I'm sorry?
In this column of your participation report,
Yes.
this is the total number. This is the exclusion. This is the adjusted number.
That's correct.
You arrive at 28% by excluding this.
Excluding the electric
So I'm
supply,
asking, when the
PPL,
25%,
as an example.
when the 25% goal was set, was it 25% of this or 25% of that? And my contention is it was 25% of total contract dollars before things were excluded.
Councilman Good, with the adjustments that we've made that include electric supply for $52 million, human services, court-appointed
See, the
services,
reason- see, the
$38
reason-
million,
see, the reason-
we cannot
The
get
reason why this is
participation.
not going well is because all I asked to do was discuss the numbers. And you want to
Yes.
discuss why the numbers say the numbers say. I want to discuss what the numbers actually are. And we can't even agree the numbers actually are. But what I'm saying is this, and I think people probably get the message now. You achieved 28% of 80%. That's only 22%. You now have a goal of 30% of only 80%. And that's only 24%. You've never reached a 25% goal. All you did was change the math. And so the simple question I was getting to is, what are you going to do to increase participation? Because you are, if you look at the numbers and compare apples to apples, rather than apples to oranges, in 06, we were 23.6% participation. We're not anywhere, we have not exceeded that at all. We are not anywhere far from that. We are at almost exactly the same place. So the question is, what are you really going to do to increase participation rather than change the math?
So I'm going to tell you some facts that I have. Thank you. So the facts that I have were in 2009, we awarded $169 million to minorities and women. In 2013, we've awarded $243
We're not talking percentages
million.
anymore.
Well, no, we're not. We're talking
Okay.
about real dollars.
Mr. President, I'm finished.
Yes, sir. Thank you, Councilman. Thank you very much for your testimony. Chair recognizes Councilman Jones.
Thank you, Mr. President. I don't know what I'm giving up for Lent, but I'll figure it out by the end of the budget process. What I'll do differently is I want to say that some of the good things that I'm optimistic about first. I'm very optimistic about the fact that we aren't Detroit. And we didn't have to, during the recession, lose a third of our city and reclaim it to farmland. I'm thankful that I'm not Camden, where we had to be annexed almost by the state in order to have a police force. So to your team, good job of navigating us generally through one of the worst recessions that we've seen since the 30s. And having said that, we'll segue into some of the issues that I have for the five-year plan. Particularly the passage of the single sales tax factor apportionment and the $100,000 exemption. What kind of impact will that have on the business income receipts tax, which is affectionately known as BIRD? And what I mean by questioning that is that it's my understanding generally, not being a tax accountant, that we will only tax the sales that happen within Philadelphia. And how will we verify what happens in Philadelphia versus them claiming it happened in the Ukraine? And how are we setting up so that we don't miss income that we can receive? And all of that is predicated on the fact that we promised the school board that we were going to increase our revenue collections by $30 million. And I need to know how we're doing on that.
Okay. And the two separate things. I think in terms of how we verify and kind of audit the business tax, I'll probably ask the Revenue Department to answer that. So, you know who you want to have come up, but.
Good morning, Councilman.
Always a pleasure to see you.
Nice to see you as well. Your question with regard to the single sales factor, I'm going to let...
We could start with the easy question
Okay.
first, which is, how are we doing on that $30 million that we promised the school board?
We promised the school board $28 million, and we're doing very well.
And what is that? I mean, are we close, or how close are we? Are we exceeding projections?
We have not exceeded projections as of yet. We are working vigorously. You know, there are some strategic efforts to target the 4 taxes that support them, and all those taxes are coming in well. The only thing that is a challenge at this point is our real estate collections, which we're doing very well until the end of the year. However, the current year taxes, which will be due on March 31st and allowed for early payment on February 28th, are coming in slightly slower than we had expected. Overall, our collections are up 131% on the school income tax, 2.5% on UNO, and 21% on liquor. However, the real estate tax is down about 5%, and because of the largesse of that tax, we have a little bit of a challenge, but we're hopeful as to what March will bring, and we're doing some things to try to make sure that those collections come in a little bit better. Beginning of the end of this week, Some taxpayers who have not yet paid their real estate taxes will be receiving a robocall from the Revenue Department, just reminding them about taxes being due and offering that if they need another copy of their bill or need some type of assistance program to contact our department. Additionally, we will be having early referral of our overdue taxes happening very shortly after the due date. We're preparing them now so that collection agencies can begin the effort there to help us bring in those revenues. So we'll be doing lots of different things to try to encourage real estate to come in a little bit better by the end of the fiscal year.
So generally, we are on track to at least meet that $30 million obligation.
Yes.
With the exception of the property.
With respect to, right, yes.
I mean, and that has been doing better in March, right? So if you had asked us 2 weeks ago, we would have been, I think, even more concerned about the property tax, but we've been making up ground as March goes on.
So to the specific question of Bert and how we will make sure that there are no malfeasance involved in people trying to have tax avoidance by way of saying their sales are some other place in the city of Philadelphia, how do you plan on verifying that kind of activity?
Okay. Frank Breslin, Deputy Revenue Commissioner. That's a compliance issue. We hope for, obviously, we hope for voluntary compliance. That's the first effort. So, that begins with education because this is a change in the tax laws. So we have to make sure that, we continue our effort with tax professionals so that they understand the changes, get the changes out to taxpayers so they understand the changes and they can complete the tax returns correctly. Then it turns to enforcement and our compliance effort, and that's primarily with our audit unit. We select cases for audit. It starts with screening. We screen tax returns to see if the returns look as if they were properly completed. We'll do comparisons to prior year tax returns. So we do all that kind of back office or, back room operation in reviewing tax returns. We'll also use our compliance effort will also include some non-physical reviews where we do things through technology, where we can program certain types of analysis to if tax returns look out of the ordinary, if ratios jump out or something, they can kick out and we can select those for audit. And then we actually get our auditors out there to go out to those locations or to bring smaller taxpayers we bring in, but primarily this is an issue for the bigger taxpayers. So we go to their location and we actually dive into the books and records and we look to see where the sales or the services actually took place. With sales, we'll look at shipping or the actual invoices. If it's a lot, we'll do statistical samples. We won't look at everything, but we'll look at a month or some period of time to make sure that we look at what we call their exclusions. So if they're not reporting it as taxable, we look to the actual source document to see if that particular transaction was reported correctly.
I say this, and I'm emphasizing starting with this 5-year plan this way because we spent a lot of time on ABI last year. And a lot of the concerns that I heard when I traveled to Councilman Heenan's district or Councilman Johnson's district was, what are you doing by way of collections? And we were pleased to find out that Tolson and you guys were really ramping up the collection portion. When we look at the Burt tax, the income portion alone represents $500 million with a B, dollars that we should be going after. So we want to make sure that we are looking at every way to do proper samplings to kind of send the signal of educating businesses that we're serious about collecting it. It represents $500 million worth of revenue to us. So we want to make sure that you're on that. With that, Mr. President, I'll wait for another round to allow other people to ask questions.
Thank you, Mr. Leader. Ms. Tolson, could you hold on 1 second?
Yes, sir.
Just had a real quick follow-up. And I missed you at the block captain's rally last Saturday. It wasn't the same without you. It was great, but you not being there cheering us on, it was,
I miss being there as well. Certainly my heart is with the Streets Department, and I've enjoyed working with the fine folks that are there, and I'm looking forward to collaborating with Commissioner Perry in different ways. But my mind, right, my mind and work right now is with the Revenue
He,
Department.
he did a good job, but it just,
I know he did.
just wasn't quite the same.
Yes.
Real quick, in terms of your collections, and I'm glad to hear that collections have ramped up considerably, my question is, and you may not be able to answer this question right now, but how much of those collections are actually annualized? So as an example, there are a lot of taxes owed, significant, I'm assuming some portions of that are actually interest and penalty that's not necessarily annualized. So we can get a more accurate sense of the growth in whatever taxes you're responsible for collecting on the out years. Can you kind of tell me, or if you can
I
get back to
don't
me?
have that data now, but I can get
you-
back to you and
you-
provide some information.
All right, you understand what I'm asking you?
Yes, sir.
All right.
You're asking what is being added to the base going forward?
Exactly.
As opposed to one time or interest?
Exactly. Thank you. That's all. Just- If you can get that to us during the course of the process, prior to you coming back as the newly minted Revenue Commissioner.
Yes, thank you, sir.
Thank you. I'm sorry. Ms. Toles, hold on one second. Councilman Kenny, this,
Thank you. What actions have you been taking or what cooperation have you been having with L&I relative to...
excuse me, Councilman, is this a point of order?
Point of order?
Yeah, this,
Actually,
because we got a pretty long list.
no, but I don't want them to get away.
All right.
Can I I'll wait in line if they can come back.
Just say point of order,
No.
so it'll be,
Point of order.
there you go.
It's magic three words.
That's the magic word.
Abracadabra. I'm just trying to understand how you're interacting with L&I relative to the collection of wage taxes, business taxes in industries like construction, hair and nail salons, people who are consistently giving 1099 forms to employees and making them subcontractors as opposed to employees. For example, when we had the mess at 22nd and Market, that tragedy, apparently that company had no active payroll accounts, no active wage tax accounts with the city. So either either the owner of the business was taking down the property himself, or he had people on site that he was paying cash, or he was paying in some other form. How do we get to the bottom of this underground economy that uses 1099s as a way to circumvent the tax code, both federal, state, and local, workman's comp, unemployment comp, I mean the whole bit. And as you know, I'm a huge fan of immigration, but the taking advantage of undocumented people, not paying unemployment or workman's comp benefits, and paying them under the table, every week in an envelope of cash. How do we get into that world and begin to take those folks down so that people follow the rules?
Yes, thank you. Councilman, I'm pleased to say that the Department of Revenue and Department of License Inspections have begun a sincere and intense effort to tie the relationship in ways that we think will be helpful with addressing some of the problems that you're describing. Right now, there's a monthly meeting to discuss contractors' issues. Additionally, we're looking at some of the we're regularly looking at the tax clearance issue that may impact businesses. L&I uses a very strict standard which requires that everyone coming for a permit and a license has to present their tax clearance form before they're allowed to get their documents from their agency. So they take the issues of taxes and proper payment or allocation of taxes very seriously. Additionally, Commissioner Williams and I have just started our dialogue about how we can even further improve our collaboration to, make 1 + 1 = 3. I think that our commercial activity license revocation program had its genesis in that relationship, and with them we created a memorandum of understanding which gave us certain authorities that they had. And through that program, we've been able to collect over $17 million in taxes in about 10 months. So I think that our relationship is still being defined, but it's getting rich very quickly.
Do we require subcontractors who work under a 1099 program to have a business activity license? Would that not be a way to be able to track those individual folks who hold themselves out as being subcontractors, which are really employees of the company just trying to beat the tax code?
So to answer the first part, that subcontractors do have to have a business
No, but
privilege tax
here's
license.
my question. XYZ Construction Company has 20 people on the payroll, and he pays them as individual contractors with a 1099 form at the end of the year. They're responsible now for paying the taxes, and if they live in Alabama or Georgia or Ohio, they're probably not paying, they're just going home. How do we keep track of those folks by requiring them to have a business activity license so that we can track their tax payment or non-payment?
Okay.
And do you guys go on the site like the IRS and do a random audit of a firm that's doing business in the city? Either, I mean, again, the two areas that are the most problematic is construction and, believe it or not, nail salons and spas. I mean, they try to pay their employees as individual contractors, so they don't have to worry about the tax collection, and it's up to them, and we don't even know who they are.
Right. So we work this in a couple of ways. One, we work it through our audit unit. So every audit that's performed of a business, we look to the 1099s, and we look to see the appropriateness of whether they're actually a contractor or whether they're an employee. If we determine that they're being misclassified, because there's a lot of benefits for a company to
Sure.
classify that way.
It's a lot cheaper that way.
Yeah, then absolutely. Then what we do is we reclassify them as employees, and we assess the company for the wage tax. So we won't pursue the individuals, we'll pursue the company for the wage tax.
Do we also cross-pollinate with state and federal tax officials to let them know that these folks are doing what they're doing? I mean, for example, I'd rather everybody be paying unemployment compensation benefits and workman's comp benefits, even if the person's an undocumented day laborer.
Yes, we have information sharing agreements with the IRS and the state of Pennsylvania. With the state of Pennsylvania, we've just kind of re-energized this agreement, and actually our audit manager and our compliance director have been meeting with their audit manager and director of compliance to start sharing audit information back and forth.
Because
we also do that with, we also have done that historically with the IRS.
I mean, the differential sometimes in Philadelphia is always known as this kind of high labor cost city. But the differential between Firm A and Firm B sometimes is Firm B is not paying all the things that Firm A is paying, and therefore the differential is going into their pockets and not into the tax coffers. And then we get a reputation as being a high-priced town when the guys who are lower priced aren't following the rules. If everybody followed the same rules, probably the price would be pretty much the same.
And the IRS over the last year, or the last couple of years, but particularly over the last year, has re-emphasized their focus on this, and they share their information with us as well.
Okay.
So when they do an audit and that issue comes up, we will piggyback on their audit and assess it.
I'm through, but I appreciate your continued vigilance on this issue because it's very important. Thank you.
Thank you.
Councilman Carlton Williams.
You're volunteering to testify?
No.
People don't normally
But
do
I
that,
just
sir.
want to echo what Commissioner Tolson
Okay.
and I have been working on, Council President. My name is Carlton Williams, Commissioner of License and Inspection. Councilman, in terms of oversight and our response to actually having physical people on site, as you know, this budget represents 27 new building inspectors. Part of those inspectors will work in a compliance division that will be trained by the Department of Revenue to identify people who have either W-9 or subcontractors so that we can be more aggressive in our enforcement.
Thank you, Commissioner. Thank you so much. Thank you. Thanks, Councilman. Thank you. That was pretty good, too. Thank you. Chair recognizes Councilman O.
Thank you very much, Mr. President. So for the Chief of Staff, good morning.
Good morning.
Could you explain to me what, on page 5 in the second paragraph, when you talk about the wage tax cuts, it's a total of $166 million over the course of the plan, which is which goes from fiscal year 2015 to fiscal year 2019. That's a 5-year plan. And what the paragraph states is that the cuts have a value, or the value of the wage tax cuts total $166 million over the course of the plan. Are you cutting the wage tax by $166 million, or are you saying that the reductions in the percentages have a value of $166 million, and what does that mean exactly?
So I think probably the way to describe it, and Rebecca can correct me if I'm wrong, is if we were not doing those reductions, we'd collect $166 million more over the 5-year plan.
Say that again?
If we weren't doing the reductions that are scheduled,
If you were not
we were
doing the
not doing the
reduction.
reductions that we included in the plan, we would collect $166 million more over the 5 years.
So how much are you cutting?
I'm sorry, can you-
So myself as a taxpayer,
Right.
when you implement those percentage of cuts, reductions in the percentage of my wage tax that I pay.
Right. So if you look at, I think it's page 25 in the plan. There's a chart that shows the wage tax rates each year from 14 to 19. So you would look in the resident rate wage tax column, and in 14, whatever your wages are would be multiplied by that 3.92%. By 19, you'd be multiplying it by 3.74.
Yeah, but you also have a proposed estimated growth in tax revenue, and in the report, you anticipated 3.59% for fiscal year 2014, and it only grew by 1.75%, which is less than half. And based on what the administration has in terms of the perceived or the anticipated loss in jobs, 75,000 jobs will be lost by 2021. It does not appear that you can stand by a proposed growth in tax revenues of 3.68%, 3.74%, 3.56%. Those seem to be kind of unrealistic growth numbers.
So where's the 70,000 loss come from? Where you're...
Well, we have received information consistent with job loss in Philadelphia from, for example, eConsult. And as I recall, that was part of the administration's presentation. Separately, we have received presentations and looked at numbers from the U.S. Department of Labor and others. So to put it within context, 1970, this city had about 765,000 jobs. By 2010, we have 545,000 jobs, and we're anticipating, if nothing changes, such as a reduction in wage tax, a loss of another 75,000 jobs by 2021. So if you are saying that is not correct, that's fine, but if you would give me the documentation that contradicts that job loss number, primarily low-wage jobs are being lost. So,
What we can give you, I think that might be helpful, is the document Rebecca's looking at now, which is the rationale for why we're projecting the rates of increase that we're projecting. And Rebecca can give you more detail on our work with the outside consultant and the conversations she had with economists at the Fed, but that's the basis for these projections.
okay, so if I do a static number, not a rosy picture of the future, not a bleak look at the picture, not 75,000 jobs lost, not growth at 3.78% of revenues. If I just do a static number and I reduce the wage tax over 10 years from 3.92% to 2.09%, I only get $100 million. And you're getting like $166 million over like 5 years with a much smaller decrease in the wage tax, albeit I did not include non-residents of Philadelphia.
Yeah, we can show you exactly how we got to those numbers, and if you'd like, we can kind of sit down and walk you through
Yeah,
it.
and I'd also like to understand the logic because, primarily since Philadelphia is losing jobs, and that's not true for outside of Philadelphia, if you can reduce Philadelphia wage tax primarily, which is where the problem is, and then the money gets distributed within Philadelphia, and we just increased the AVI in Philadelphia, not outside of Philadelphia, you know, I would like to understand why you did not primarily look at reduction of wage tax for Philadelphia residents first, and then reduce the tax in a way where we'll see growth and expenditures in the city, and, you know, would help us be competitive. So at the same time, if you're losing $166 million, I'm curious where you're going to make up the money. In other words, it's tough enough dropping it $100 million over 10 years and coming up with the taxes that provide the services based on growth and other things that are reasonable projections. But if you're dropping it in 5 years to $166 million, where do you get the money if you're not increasing taxes and fees somewhere else? And if you're increasing it somewhere else, where is that somewhere else?
So the plan includes that loss of the $166 million, but, you know, it's balanced, and I mean, part of the reason it's balanced is that when we talk to economists, talk to our outside consultant, they think that there will be growth in really in all of our taxes, and we build that growth into our plan.
So just to add to Rob's comments, there is expected to be both employment growth as well as wage growth in the city of Philadelphia. So overall, our revenue consultant, IHS Global Insight, as well as the economists we met with at the Fed, believe that there will be employment growth here as well as wage growth. So in this fiscal year, you're correct that we had to lower the projection down from 3.59% down to 1.75%, which shows how uneven the economic recovery has been. It's still growing, but not always meeting expectations. But in terms of the growth, that is something we spend a lot of time with economists on in terms of developing our projections.
Yes, I do appreciate that. I mean, I think that the former numbers, in the short time I have been here, some of the anticipated numbers have also been incorrect, and that has dramatically affected, you know, if you're spending more money than you're taking in, that we've had to raise taxes, and, you know, taxes have to be raised sometimes to provide good services, but taxes being raised after you're in debt is always a problem, or when you're surprised by the amount of taxes you have to raise. I guess what I am saying is, if I did not have the number based on what seems to be consistent and reliable projections of job loss for the city, despite growth in certain sectors, certainly technology and the professions, but the overall job loss primarily for low-wage earners, which coincides with our dropout rate and our recidivism rate and everything else, would indicate that even in a static number, you're not going to see that kind of growth for revenues. You're going to see a loss of jobs, and that loss creates more burdens upon the social service system and the city system, from prisons to police to everything else, which would increase costs, not decrease costs. But I'm not even doing those projections. I'm just saying if nothing changed, I cannot see how you would get to $166 million in tax, basically not collecting those taxes off the wages based on the information that has been provided to us, and at least that I have. If you have if you would show me the projections of growth in jobs and earnings and revenues based on that, I certainly would look at it in comparison to the other numbers that I have.
Yeah, we'd be happy to share that, and we have detailed projections. I mean, we spend a lot of time on projections, which are an imperfect science, but we've been pretty close for the last year or two, coming out of the recession. And so I'd be happy to show you the numbers showing projected employment growth as well as wage growth, and then also our calculation of the $166 million in revenue, in foregone revenue from the tax cuts.
Okay, thank you. The second thing I'd like to understand is the sale of PGW, which I At this time, I'm not clear that that's going to go through, but provided it does go through, you're stating that $400 million will go into paying down the pension deficit. And is that a one-time payment?
So there are two parts to what we would propose. One is to put the $420 million into the pension fund. When that happens, it reduces the amount you have to pay each year, but we would propose to not reduce that amount, other than to hold the city harmless for the loss of the $18 million that we get from PGW each year. So there would be the one-time deposit, and then essentially each year we'd pay more than the required amount under the MMO.
That's, my question is, in light of past history of this city, when we have made a one-time payment, and unfortunately, that's when the market kind of took a sharp decline, is it a wise thing, in your opinion, to deal with the pension deficit in that manner?
Yeah, I think you're probably referring to the pension obligation bonds, and after that deposit was made, the market went down. But, I mean, if we hadn't made that deposit, the market still would have gone down, and our funding percent would have been even lower. So, I mean, I think the goal is to improve the funding percent, and I think that's a responsible and kind of appropriate thing to do. So I would say yes, it is. I think it is the appropriate thing to do.
So if we had apportioned out the payments with the same amount of money, even though the market declined sharply and then leveled out and then increased, we would not be as much in debt. Or conversely, had the market continued to go up, we would be in a fine, and like the market goes up and down on cyclical bases, but, you know, it's a little bit of a gamble that you're putting all the money in one shot and it doesn't decline sharply.
But we're 48% funded. So when you're 48% funded, that's right, if the market goes down, you lose less, but you have a weekly funded pension fund. And I think that we all agree one of our goals is to improve the health of the pension fund. The higher your funding percent, if the market goes down, the more you're going to lose. On the other hand, as you point out, if you earn more, then you're in better shape having more money. And the other thing I would say is that one of the things that we've done over the last couple of years is change the way we allocate the assets in the pension fund so that it's not as susceptible to movements in the market. You know, obviously there's going to be an impact. I think there'd be less of a dramatic impact now than there would have been back in 2000 or whenever the pension obligation bonds were issued.
All right, thank you very much. Thank you, Mr. President.
Thank you, Councilman. Chair recognizes Councilwoman Tasco.
Thank you very much. I have a question on page 39 relative in the plan relative to the labor issue. I'd just like some clarification about you talk about the fund's health weakening with the funding percent dropping from 55% in 08 to 48% in 13. That drop is tied to mostly the market?
Yes, that was a big part of the reason for that drop was the decline in the market during the recession.
Okay. So in your negotiation with the unions, you're asking for certain givebacks, right?
We're asking for change, yes,
So
that's right.
How, if the decline in the pension strength was based on the market, how do you charge the labor unions for the cost?
Well, I'd say two things, a couple of things. First, even at 55%, which was before the market went down, that's a very weak funding percent. I mean, that's probably more than 20% below where you want to be.
But the question I want to know, though, is the employees contribute to the pension fund.
That's right.
They do it every week. But the city doesn't put its part in the pot.
Well, the city does. We put
But you don't put
almost
enough.
600 million in.
You don't put enough.
We put enough to amortize the unfunded liability over a number of years. But our proposal for making the fund healthy isn't just change on the employee side. I mean, we're also advocating for putting more of the sales tax into pensions and for proceeds of the PGW sale to go into pensions.
But
So
I
we're
wanna get
looking
back- I
at,
wanna get back.
we're looking at a number of ways to increase the health of the fund. We
I want to
can't,
get back to why are you asking for these givebacks from the union?
because
Okay.
we need a number of different things to get the fund back to health. That's one of them.
But you don't have to do that. There are other ways you can do that, right? So I'm just saying, I'm not a labor person, okay? I don't negotiate. But it's just not made sense to me how when the employees pay their part every 2 weeks, they play their part. But you want these givebacks, and some of these givebacks don't have anything to do with the health of the economy that I see. Maybe I'm wrong. The sick time have any impact? That may have some impact on the pension, but they pay their part of their overtime to the pension fund, because it's not just free, right?
And the overtime proposal is not related to the pensions. That's
All
a
right,
separate.
okay, so why are you asking for that? Then the other thing is, what about sick time? Does that have any impact on the,
That's not one of the pension proposals. That's a proposal on really controlling the cost of overtime.
but does that have anything to do with the pension?
Um,
What part of these negotiations have an impact on the pension
So
fund?
there are two things that we're asking for to directly impact pensions. One is an increase in contributions from current employees, and the second is that new employees move into the hybrid plan, which is a combination defined benefit, defined
Well,
contribution.
does the current plan they have, the current plan they have, to me, doesn't seem that it impacts the pension plan. It's just something you want to do, because it's maybe the good government thing to do.
So the contribution, changing the contributions,
From a
it's-
hybrid to a hybrid plan.
well,
Is that because
two parts.
The
One,
do-gooders are saying we should go to the hybrid plan.
no, it's because it reduces our liability in the long term, and that helps the health of the pension fund. And what our actuary said is, for everybody who enters it, you save roughly about 2.5% of their salary. So that, in the long run, will help the pension fund.
Well, you settled with 47. Did they, and now you're still trying to negotiate with 33.
Right.
Did you get those givebacks from 47?
47 agreed to increase contributions for existing members, so they agreed to that part. And for new members, their agreement was that they would either pay an additional percent over the additional percent, or go into the hybrid plan. So we did reach an agreement with them on pension changes, yes.
We'll come back to that again when we have you in here to discuss that, because it just seems a little strange to me, and I'm not real smart on that stuff.
I think you're pretty smart on it.
The other issue I want to raise is, I think, Everett, you talked about additional dollars for the recreation department.
Yes.
And different programs at the various recreation departments. I want to know, how will that money be appropriated? Who will make the decision as to which rec centers get those funds?
What I believe we have is we're just taking and increasing to the recreation area, but as far as you mean what specific programs will get that money, that just comes out through during the times when we are talking in core team and what the mayor would like us to see do, and also with the recommendations that come from the rec centers themselves. And it's a collaborative
So all
matter.
recreation centers will have access to opportunity
It's
to
not
access
all.
those funds?
It's actually programming, increases in programming in rec centers throughout the city. I think Mike DeBerdinis, the Deputy Mayor for Parks and Rec, might be better suited to give more details. If he's here. Go.
Hi, Councilwoman. Good, thank you. Mike DeBerdinis, Deputy Mayor, Commissioner, Parks and Recreation. We will, this additional $500,000 will either predominantly or exclusively be spent in the program division in Parks and Recreation, and that means we will be hiring new full-time recreation leaders, as well as smaller portion of that will be spent on increasing our capacity to bring on seasonal staff. That money will be evenly, to the extent that you can spread, it's not a lot of money, it's spread out through 8 districts, but we will evenly disperse the funds to our existing centers in each park and recreation district to support an increase in, some increase in hours and increase in programs as well.
Thank you very much. The other question, and Everett, is Mr. Gillison, I should say, I'm sorry. You also talked about, and I'm trying to find it in here, but you might have added it to your testimony, about increasing dollars to commercial corridors. Did I hear that?
Yes, I don't know if I said it, but it is. commercial
There's
corridors.
$5 million in the capital budget for neighborhood commercial corridors.
So how will that be distributed?
That money, the Commerce Department has recommendations for that money, and then typically we've worked with the Council President's office on those projects. So a request has been made, and we're compiling the information of what Commerce plans to do with that money, and then that will be given to you before the capital budget hearing next week, so we can talk about it more.
Okay, thank you very much.
Sure.
Thank you, Councilwoman. Real quick, I didn't anticipate getting engaged in this contracts issue. Sick time.
Neither do we.
Yeah, I know. Sick time. 47 got a contract. Does 47 have a favored nation provision in their contract?
Yes.
So that means that if 33 gets a better contract, then 47
Yes.
gets the benefits of the better contract that was negotiated for 33.
Yes, if it's apples to apples.
So if you kind of like, if you go in first, you get like a double dip. You can actually get something that you, well, it is. I mean, you can kind of get what you negotiated for, and then if somebody else gets a better contract, you actually get what that person got.
The one thing that I will tell you is that it covers wages and pension only, number one. And number two,
That's usually the biggest.
it's usually the biggest. But number two, the answer to the question is we're trying to get contracts. So we're trying to incentivize people to sit down, talk, and to finally come to agreement. So
that's why you gave them the favored nation provision.
that was one of the requests.
Sign the deal. If it's a better deal down the line,
That was a request made at the negotiating table.
Right.
And it was one of those things that we said yes to.
all right, okay. I just wanted to, because you referenced 47.
Yeah.
And you got a contract, but
Yep.
there is an opportunity for them to get more as it relates to a contract, potentially. I don't know what you'll do with 33. With respect to sick time, make sure I understand
I'm
this.
sorry, sick time?
Sick time, yeah.
Okay.
If currently the proposal is if you're 33 and you take a sick day that was given to you as a result of your tenure here, I'm assuming that every year you get so many sick days, and they call it the bank. So you basically bank these sick days. And if you take off a sick day during the course of a week and you're asked to work overtime on Saturday, that will not count as overtime. So the sick day will not go towards your 40-hour work week.
The sick day would not, I don't believe so. I believe that what we're trying to incentivize is people who are actually working and are coming to work and not abusing the sick policy. So the idea is to make sure that sick time itself is not just used in order to then call out sick on one day and then make up the quote-unquote lost wages by working either a double or coming in. But if a person actually, I think with 47, if a person does work on that time, then it does not count towards the overtime. I believe that's what we negotiated. Is that right, Shelley? That's right.
47 has anything over 8 hours, then they get overtime.
Yes,
Right. That's their provision.
that's their
So
provision.
I'm
That's
going
correct.
to ask you again. Is your proposal for 33 says that you will not, the sick day does not count towards your 40 hours if you want to work
That's
overtime.
correct. That was one of the proposals
Just
that
want to
we
make, because
made.
you said you weren't sure when I
Yeah,
first asked you
no,
the question.
yeah, that's correct. That's one of the proposals that we have that's out there. And again, as I've said from the beginning, we make a lot of proposals. We have made a lot of changes in our proposals. We have tried to make sure that people understand that when you're sitting down, people can come back and forth with what we're trying to do and what they're trying to do. We've been waiting for counter proposals. So all this is going to happen during and at the table. And when we're there, we'll be able to come out with an agreement, I think, that is beneficial to all. We only have 33 left. Everybody else has gotten contracts over the last number of years. Everybody, except 33.
Everybody else's contracts are a little different.
Everybody's
And-
contract is different,
And
absolutely.
47 has a favored nation status. So with respect to the sick time, since you brought it up, you say your concern is the abuse of sick time.
That's one of the, yes.
Is it accurate to say that in the 33, there is actually a policy with respect to sick time that requires certain things be done, such as
sure there
doctor's
is.
notes and all that?
I'm sure it is.
Good morning, Council
Morning.
President. Shelley Smith, City Solicitor. Yes, citywide, there is a sick leave abuse policy, yes.
And there's a...
And it impacts employees in 33 as well as employees across the city. And there is a process for determining whether employees are in a sick leave abuse status, yes.
Okay, so if you're suggesting that the purpose of this particular proposal is to eliminate abuse of sick time, then why isn't that policy that's currently in place sufficient?
I don't think we want to negotiate our contract. I don't think we want to engage in contract negotiations here on the
Just
floor
asking
of
a
City
simple
Council. The goal of these contract negotiations, and specifically the goal of the sick leave proposal, is to eliminate situations which operating departments have complained historically, where city employees call in sick and then get the benefit of that sick day by earning overtime in spite of that. So essentially getting more than their standard hourly wage by virtue of having called in sick. I think that, as I said, as the Chief of Staff said, we were able to negotiate this issue successfully with 47, and we hope that we'll be able to negotiate it successfully with District Council 33 as well.
Well, would you acknowledge that the 47 employees and the 33 employees, by and large, have different work environments?
I'm going to say again, we were able to negotiate this issue successfully with District Council 47, and I hope that we'll be able to negotiate it successfully with District Council 33.
So you're not going to answer the question.
As Mr. Matthews has said, every contract is different. The 33 employees obviously do different jobs than the 47 employees do. That's why they're in different bargaining units. But the issue of excessive overtime is a concern for city employees as well as city administration. And we certainly hope that over the negotiating table, we're able to negotiate this issue successfully.
Is that provision in police and fire?
I don't actually know off the top of my head, but those contracts, as you yourself just acknowledged, the 33 and the uniformed and non-uniformed contract provisions have historically been different. So
That's
I
a
wouldn't.
simple question.
I said I don't know off the top
know.
of my head. That's the first thing I said. I don't know off the top of my head. But it wouldn't surprise me if it isn't there, because the uniformed and non-uniformed contracts have historically been different. It's been a source of great contention among the unions over the years that I have been involved in the contract negotiations, and it was a source of concern in the previous administration. The contracts are different. The uniformed employees are governed by different bargaining law. So the contracts are different, their process is different.
I understand all that. I just want to make sure, since the Chief of Staff indicated that the purpose of this proposal was because of the abuse of sick time, and you have concurred that you do acknowledge that there is an abuse of sick time policy currently in place.
We're always trying to improve.
It sounds like to me that you're just trying to eliminate overtime wherever possible. And if that's the case, that's fine. I mean, yeah.
Council President,
I mean, that's fine in that it's okay that you propose that, not that I agree with you.
Well,
Just wanted to
I think that what we're trying to do is have an environment where overtime is, in essence, part of, not necessarily just part of your daily calculation, especially if you end up using things in a way. We're trying to put an environment where everybody can have a predictability on what we're doing, and where we have been informed by the departments that there's a problem. We're trying to find ways, working with the unions, to resolve those issues. And if there are systemic issues that we're trying to deal with, I think that it's only proper at the negotiating table to bring up the problems. I think both sides at the table do that. They have issues that they have brought to our attention. We sit down, we bring our issues to them. We try to hash out what the resolution should be, and sometimes it takes longer than we want, but the idea is to negotiate things out at the table, and we can bring our issues forward. How that gets resolved is part of what negotiations are about. So I don't know, I'm not going to sit here and say I can bring up a lot of things that I believe, but at the end of the day, we have to be able to look at each other over the table and say, we come to agreement on things, and that's what I think negotiations and good negotiations do. We don't get everything that we want. The unions don't get everything they want. But at the same time, we do have to be part and commit ourselves to be part of that process where we get to that point. And, you know, we've been able and been successful to get to that point with all but one of our unions at this point, and we're still trying, as you know, with our remaining union. So we're going forward.
Okay. I won't belabor the point because we have a number of members, but thank you. Chair recognizes Councilman Johnson.
Just a couple questions regarding preparation for our discussion around funding our schools. I read a disturbing article day before yesterday regarding Bodine severing ties with the World Affairs Council. Bodine isn't inside my district, but growing up in South Philadelphia, attending Edward Bach Public High School, Bodine was always one of those good schools. And so when I read the article about them discontinuing their partnership with the World Affairs Council, I felt a little ashamed and embarrassed as an elected official that such a good program was discontinued. And so as we prepare for the discussion around how we're going to fund the $320 million for our school district moving forward, I'm trying to get some clarity from my constituents on a couple of things. And so the first one would be the $120 million from the sales tax extension. Is that is the 120 the amount that would be after the if the proposal is approved on the state level regarding the split of the sales tax extension funding? Is that 120 after or before?
So the proposal that the mayor and council president signed off on has an 85-15 split of the sales tax in FY15, and that would provide a little more than $120 million to the school district.
That's after the split?
Yes.
Okay. In terms of the cigarette tax, how much is that anticipated to generate
It's
in
about
the event that it's passed?
$83 million in the first year.
If it's not passed, what's our plan B?
So, the challenge is that we want to be able to provide the funding to the school district without damaging the city's general fund. At this point, the tobacco tax is the way to do that. So we're pushing hard for that.
What's the status in Harrisburg regarding, who's carrying the legislation in Harrisburg regarding the cigarette tax? And what's the current discussion around it?
Well, I think the chair of the Philly delegation in the House is one of the people taking the lead on both the reallocation of the sales tax and the cigarette tax.
So they're working in partnership. Council President, you're part of that conversation as well?
Yes, Councilman.
so-
And actually, as are members of the General Assembly from the Philly delegation leadership. So we've been having discussions among the group, and the hope is that we can be on the same page, both the mayor and I, which we currently are, and the leadership in the House and the Senate from the Philly delegation on a one-track approach towards that.
Okay. And if y'all can keep us abreast as members of council so we can report back to our constituents. 'Cause
Absolutely.
we all are getting phone
Yes.
calls regarding how we're going to move forward.
Yes.
And also taking in consideration in the event, I'm always pragmatically idealistic that hopefully it will pass. Also, former member of the House. I have to look at a little bit of political reality that it is going to be a heavy lift, so what will be the plan B to take in consideration so we won't be put in any tough situation regarding any other funding proposals. And so as much of this we want to know up front, on the front end as opposed to down the line. Who's going to be doing the amendment for the proposal for the 50-50 split of the sales tax? Obviously, Harrisburg put forth a proposal that they want to see the city of Philadelphia do, unbeknownst to us or without having a conversation with us.
Right.
But nevertheless, they still put forward the proposal saying, here's what we're putting on the table. Who's going to do the amendment?
I think that would come from either the House or Senate Philly delegation, and I think there have been, there have been discussions with a number of people up there, and so I think they're probably looking for the right vehicle, and they'll, attach it to the right vehicle when that comes up.
Okay. And Council President, that's still in discussion with Philly delegation, House, Senate-wise?
On that
regarding this
particular,
amendment?
that particular aspect has not been discussed among that group. The issue was we were trying to have an approach, but the actual procedural portion of the process is not something that I think myself I can speak for, or the mayor will have any level of jurisdiction. I believe in staying in our lane in some respects, and that at that point we're going to stay in our lanes and let them do what they do up there.
Okay. All right. Just getting some clarity so I
Right.
can report back.
And one other thing I
To my
should say that the current proposal is not, it's a sliding split that starts at 80, 85, 15, 75, 25, 50, 50. Okay, I just wanted to make sure.
Thank you, Councilman. Chair recognizes Councilwoman Reynolds Brown.
Thank you, Mr. President. Good morning.
Good morning.
A number of questions have already been addressed around the testimony provided on page 3. So let me go to a question around fleet. Let me speak to a more general question or request. For the following departments, when they come before members of council, I would like the contracts broken down, separating the federal contracts from state and local. I've just looked at detail, and I see that. So here are the departments that I need contracts broken down, separating out federal and state dollars. Department of Public Property, Department of Human Services, Prisons, Aviation, Water Department, Health Department, Office of Innovation and Technology, and Behavioral Health. At whatever point during the next 30 days over this budget season, those particular departments, in addition to what you've already provided to OEO, I need the actual contracts separated, federal separate from local dollars.
Okay.
Agreed? Secondly, President Clark asked members of council to submit specific requests we have, and of course, the questions about MBE, WBE will continue to be raised. But what I'd like to see, not just a chart for FY this fiscal year, but the chart for the last 3 years, so I can get a read on what the trends are. Okay?
Okay.
With regards to fleet, in September 2010, I, along with Councilman Kenny, introduced a resolution to investigate the feasibility of our city moving towards electric vehicles by 2015. Can your designated department head provide details on the type of vehicles you intend to purchase and for what departments?
Fleet?
As fleet, Office of Fleet Management?
Yeah, we'll ask Chris Kochi to come up.
Okay, it's talked about on page 7 of the testimony.
Yes, Chris Kochi, Fleet Manager.
Good morning.
Good morning. We have purchased 20 hybrid vehicles and 2 more electric hybrid vehicles. They should be delivered any day, so we should have them in service very shortly.
And what's your strategy going forward over the next X number of, let's say, next 5 years?
Going forward, we'd like to see how the electric vehicles operate. When we do get a feel for where we can put the chargers and how they're going to be, then our plan is to possibly purchase more.
I see. Okay. Thank you. Department of Office of Supportive Housing, on page 6 of the testimony, there's $1 million is proposed for OSH to compensate for the federal cuts. So can the department head for that speak to detail on how that $1 million allocation will be?
Danette Mintz, Director of the Office of Supportive Housing. Good morning.
Good morning.
The City of Philadelphia receives an entitlement grant from the federal government that includes Emergency Solutions Fund, and we were reduced in our funding due to the federal sequestration by $1 million, and the administration made up that difference to us in fiscal year 14, and it's proposed that they also provide their funding to us in fiscal year 15. If not, we would have to reduce emergency housing because that pot of money provides funding for all of our emergency shelters, as well as for rapid rehousing activities. Rapid rehousing activities.
Rapid rehousing?
Yes. Rapid rehousing is a new program that we were able to gain experience with through the stimulus grant, HPRP, and it has been quite beneficial. And unfortunately, under the ESG, we will provide a much reduced amount of funding, but to have the sequestration on top of that further reduced our ability to provide that. And we utilize that to help people move rapidly out of emergency housing and transitional housing.
That's it for me, Mr. President. The other questions were addressed by other members.
Good, Councilman? You good?
No, I'm finished. My other questions were addressed by other members.
Okay.
Thank you.
Thank you, Councilman. I'm sorry, Councilman. You want to do what now?
You want,
She's coming back.
she's coming back.
You want so we can be formal, just say point of order.
I know, I just didn't want a point of order who was next, but, because I was willing to wait if we needed to.
You wanna wait? Well, we have, you were actually teed up third.
Okay, well then
You
I'll,
want to wait? We'll push it. All right, so we have, maybe Councilman Heenan, you were actually next, so you want to yield to the council.
thank you, Councilman.
Here you go.
Thank you.
This is,
Ms. Mintz, I only wanted to, for the administration, as you know, we've had this ongoing case with feeding on the Parkway. And all of you know how I feel about feeding anywhere. And I'm concerned about, and I wanted to bring it to the administration's mind that we need to do something to make sure we don't make it worse. Reverend Brian Jenkins, I've been trying to send some communications out for if we get 100,000, we can maintain the level of funding for churches out in West Philly, 10 churches. If not, where he's been renting, they can no longer keep him. So this summer we lose that ability. So when by June or July, we're going to have, we'll exacerbate the feeding we do and the funding we do have for the summer here, because we will increase another 10 churches out in West Philadelphia. So would you check into that?
Sure.
Everett, I know, Dana, you know about it, you hear about it.
What I can tell you is that the public feeding on the Parkway is not limited to a homeless issue. There are many poor people who are in need of additional feeding opportunities, and what we have attempted to do is to educate the public at large that the Parkway feeding is not limited to just homeless persons. It's also been my experience that Reverend Jenkins and Chosen 300 have had the position of preferring not to receive public funds because of their desire to be able to administer and operate their programs without the city's regulatory or policy restrictions. So I'm not quite sure if that position has changed. We do not currently provide funding to any organization that is private or religiously based that is providing feeding either indoors or outdoors. It has all been privately funded or grant funded through foundations. We have tried to provide them with technical support in terms of the city's preference for how public feeding would occur. And so it seems to me that we could, through the existing task force that's been put together, I know they've been looking at those issues, and I believe that
Yes.
Reverend Jenkins is a member of that task force, that body could provide some response to him.
Yes, because it's not a lot of money. We're only talking about $100,000, and we've come this far. I know that case still lingers, and obviously, yes, I didn't mean to imply that all feeding outside is just for homeless people, since we have so many poor people. in our city and across our country. But I would like us to look into that and see what we can do to, I'll resend literature to you and to Mr. Gillison so that we can look at it and see before it's an emergency this summer to see if we can't work it out.
Okay.
Thank you both.
Thank you.
Thank you, Bobby Heenan. Thank you.
Thank you, Councilwoman. You done? Okay. Thank you, Councilwoman. Chair recognizes Councilman Heenan.
Thank you, Mr. President. I would say good morning, but we are now in the afternoon, so good afternoon. And I'll say, I have a lot of questions for the specific departments so we can get into the weeds and get down to a lot of other things, and a lot of questions I'm sure that we all have. But for today, I just want to touch on, as we've been discussing here a lot, some of the labor contract negotiations, and of all
But you don't want
people,
me to negotiate the contract here.
but of all people, I know about and respect collective bargaining. So with that being said, I'm talking about the budget, 5-year plan, not negotiations. I'm glad to hear some of the items not being discussed publicly, so I'm happy to hear about that, or not to hear about it. But, I do question the amount of dollars allocated over in the 5-year for 47 and 33. Could you explain or what the difference is in the disparity between that's allocated in the plan from 47 and 33?
Yes, the 47 is an actual cost because we have a contract. 33 is the value of the last proposal that has been made to 33. And that was made public over a year ago. We thought it was wise to value that into the plan, and we have basically done that.
What is, and I understand that, what is the difference from what is actually has been negotiated and what the last offer?
2.5%.
And I'm saying that for a
2.5%.
reason.
2.5 and 2. On wages, it's the last public offer that we made was a 2.5% and a 2% wage increase to 33, so that's reflected in the plan. If there's
So do you
other...
have a dollar? All right, so could you
Plus
provide
the
a
$25
dollar
million
value?
contribution to the health fund. No. Health fund? Yes, plus a $25 million contribution to the health fund.
You're saying plus a 25?
Yes.
All right. Aside from the savings that DC 33 has already provided to the city, and I'm thankful for that, and we all should be operating without a contract, is there a dollar value difference? I mean, not just a percent, so there's 2.5% increase and a 25. What is the dollar value difference from last offer for 47?
I don't have
Okay.
that here. I don't have that with me, but I can get that
That's
pretty
fine.
much.
And the reason why I ask is, has city council authorized the sale of PGW yet?
No,
All
I'm
right.
sure.
No,
Right.
that's good.
No.
So, and that is in the budget.
I'm sorry.
And so that is reflected in the budget. So I'm headed, so there's $700 million reflected in the budget for the possible sale of PGW asset, and that has not been authorized yet. We have a contract with D30, there's a plan budgeted, all right, last offer for DC 33 that has not been negotiated yet. But DC 47 has a negotiated plan, and that's reflected
Correct.
with certainty with the favored nations in there, which means they expect to be higher for DC 33 than 47. So why wouldn't we go higher in reflecting numbers moving forward?
Well, I would
Because you
only just...
anticipated with the favored nations clause, with the potential sale of PGW reflected that number, and that has not been authorized yet. So why are we under-reporting the anticipated DC 33, even though it's collectively bargained, and I get that. So for being conservative, why wouldn't we, put a higher number in there and then scale back?
I believe that, again, as you know, I don't want to sit down and actually put all of the various cards that when you're negotiating out. I don't want to, I think that we are conservative in what we've done. I think that we have reflected in the budget the numbers that our last public offering has been made completely clear. To do anything more than that would actually eviscerate, I believe, the negotiating possibility.
So it's your leverage in negotiation.
So we are reflecting, we think that to be a conservative and to be a responsible city, we have to put in labor costs. I think the council a couple of years ago actually asked us to put in conservative numbers for our labor costs, and I think it was 3 years ago we didn't. We started out and then and PICA also asked us to put in labor costs. So we've put in conservative numbers in order to have the place to be able to show people what our costs are and how we would pay for things. Beyond that, I think that has to come out at the labor table, and I think it's a place that both you, I, and a lot of people would like us to be, to actually get to where 47 is right now, which is having actual numbers reflected in an actual budget that will be prepared.
And I understand it, and I understand, and it's prudent for the city to reflect something in the budget. It's just my opinion that it's not enough of reflection, especially since the Favored Nations Clause is in 47's contract. So we do anticipate a higher numbers to be reported without.
I don't know whether that's going to be true, but we'll find
negotiations.
out. I don't know whether or not that's true. I mean, obviously, the clause that we put in was something that we will determine ultimately what that will mean. But it's only as to wages and pensions, and we'll have to see where that number comes in after we sit down with Mr. Matthews and come to an agreement.
Okay, I'm just stating my concern.
I understand.
As a member of this body. Speaking of pensions, I do believe that pensions are one of the most, I believe pensions are one of the most serious issues that we have to deal with as a city, and how we deal with that is it's always going to be up front for a priority for all of us here. Can you tell me, and I'll wait until I'll get in the weeds when the departments come in. All right, so there are several plans, is that correct? Pension plans?
Yes.
All right, so
You're better at this.
what plan are we in now currently? All right, so current employees.
So depending on what union they're in, but if you're asking about members of 33, they're in Plan 87.
They're plan innocent, and is that, what is the percent funded?
So the Plan 87 is probably, I don't have it in front of me, it's probably around 80, but it's part of an overall system that is 48% funded. And that's, what we have to address is that overall funding percent.
Right, but their current plan right now is approximately 80% funded. Approximately, that's going to be, I'm not going to hold you to the number, so it's doing well. I forget about the context of the overall.
But the overall context really matters.
The overall context does matter.
Yeah, for the entire
because we
pension
have
fund.
obligations.
That's right, and we have to fund them.
Everybody's
Yes,
pension.
that's right.
In moving forward, well, you had mentioned in your testimony about tax revenues. Tax revenues having a modest increase or decrease, was it increase?
Modest. Yes. Modest increase.
Modest increase. I'm glad to hear that, the wage tax reduction is back in place. But with that modest increase of tax revenue, coming into the city of Philadelphia, there are many, many projects in the city of Philadelphia, and an increase in hotel rooms. I believe there's 1,000 new hotel rooms that may be in line to be developed, and people using, coming to the city. And is that all projected in the 5-year plan in anticipation of visitor and tourism and the convention center?
Our projections are done based on projections for growth going forward from our revenue consultant and with economists at the Fed. So the short answer is yes, the projections for the future are included. We have to be reasonable about that. And we can't over-assume in terms of a certain project coming online, adding X number of hotel rooms right when it's announced. We have to be reasonable.
But there is an exciting uptick in,
There is a good feeling around
construction of
development.
new hotel
Yes.
rooms and visitor tourism.
Mhm.
I believe our conventions are going to showcase Philadelphia. So there is, a positive.
There are a lot of positive
outlook.
things
Is that
happening. Right, I agree with that. I do think, though, that so there's growth, but we also have certain expense pressures that increase as well. Like the pension and debt service increase was close to $30 million from 14 to 15. So I agree there is excitement around the development announcements and the growth in our taxes after the deep recession we were in is a good thing.
Okay. Let me go back to labor real quick. I failed to mention. So is there still a hiring freeze?
Actually, no.
No.
No. I know that specifically in public safety, I know that there really hasn't been one for
Okay.
a couple of years.
Let me state that question there. But is there a hiring freeze in the non-uniformed
No.
workers?
No.
There's no hiring freeze. There's a process by which we check and review to make sure departments have sufficient funds allocated in their budget before they go and hire. But departments are actively hiring.
Correct.
How is the new office, what is that, Center of Excellence that you established last year with taking the anticipation or, projecting ahead the amount of people in drop?
Yes.
Right, because I think that has been increasingly concerning of a lot of members. With me, I'm concerned that we're not going to keep up. So is that ratio kind of offsetting yet, or are we on a road to try to anticipating the amount of people that are in drop?
We are. I can tell you that the Center of Excellence works out of the Managing Director's office, but each of the departments as well has been charged with maintaining the anticipated drop numbers. And for the last number of years, all the departments have had to recommend not only how we're training up, because we're losing a lot of great knowledge about how things work, and we want to make sure that that is being replaced. So wherever we have had issues where we think we're losing an awful lot of people in one area, again, I will come back to the public safety area, they have actually been able to hire up with continual classes. We've changed policies to make sure that we can keep classes going in order to keep people and meeting that demand so that we don't slide as much as we have had to.
Does the administration feel that they're keeping up with that demand, or is that still a struggle now? I understand that we 400 new police,
Right.
exciting news. If we can get cadets,
right?
Both new classes in the fire department, all good stuff. I'm also concerned with the senior supervisors.
Exactly right.
And brass of our police and fire, as well as our supervisors within DC 33 and 47 with our municipal workers. I believe, I'm hoping that we can keep up with the rapid pace of the amount of people that are in drop. Has the administration, so my question was, do you feel we're keeping up with the pace?
I believe we are, and I know that there's a lot of innovation that is going on to bring additional training. The Center of Excellence, I was just looking at it the other day, was offering project management skills courses to people so that they would be able to have an improvement in their skills as they become and getting into the managerial and supervisory roles. And by doing that, we're trying to make sure that we have a way forward on that next level of supervision. So I think we're holding our own. I'm sure if there's any thing that I'm missing, I can bring it up and I'll see about trend analysis and provide it to you.
It's just
But
an
I think we are.
overview, overall, question concerning drop.
Right.
But has there been any conversation or any discussion of possibly extending in certain circumstances
No.
somebody's
No.
application in the drop?
No.
Okay. And Centers of Excellence, that falls under the managing director's office.
The Center of Excellence
So when
falls under the
the managing directors come in, I can have
Absolutely.
this conversation a little more. Okay, great. Last is the school funding. I don't want to belabor. I understand where we are with the cigarette tax in Harrisburg. I understand where we are with the sales tax. As partners with Harrisburg under Council President's leadership and coordination with the Mayor's office, where is the Mayor's office when it comes to trying to change the funding formula fairly with the state as it relates to funding properly and fairly, our public schools?
It's a very high priority for Mayor and Mayor's Office of Education for the state to move to a full and fair funding formula. We're far from that. We're one of 3 states in the country that doesn't have that type of formula. So, it's something that we are going to continue to advocate for, and we think it's one of the most important things for funding going forward.
Okay, so it's most of it, and I agree with you, and I hope we get there. Quickly. But I wouldn't anticipate that happening in this fiscal year.
I think that's right. I think this is
Next fiscal year.
That's we would hope for next fiscal year.
Okay, I have no further questions.
Thank you, Councilman. The chair recognizes Councilman Jones.
Thank you, Mr. President. Very quickly,
Oh, I'm sorry, Councilman, I'm sorry. Councilwoman Bass. I'm sorry, Councilwoman hadn't had an opportunity to ask the question yet. Right back at you,
Mr.
sir.
Majority Leader, sorry about that. But my questions will be very brief. So I just have a couple of quick questions, just so that I can put a number to some of the items that were discussed earlier. And first of all, good afternoon. How are you?
Good afternoon.
So on page 5, towards the bottom of the testimony, it mentions that, there are some reforms that will waive license and registration fees for new businesses and create tax credits. And I was just wondering, had the administration calculated some sort of value or estimate in terms of what that value would be? Because, it's great if we, want to help small businesses, recruit businesses to come to Philadelphia, but what does that equal out to? Has there been an analysis of that?
There has. I think the total cost of the business tax changes over the life of this plan is about $240 million.
What's the life?
The 5 years of the 5-year plan.
Of the 5 year, okay. Say again, how much?
$240 million over the 5 years for all of those changes.
Okay, and so that includes the registration fees and the tax cuts?
Yes.
And also, I just wanted to mention that I was very glad to hear Deputy Mayor Mike DeBerardinis, as he mentioned that the proposed increase to Parks and Recreation in the budget would be spread evenly, because I know that as a chair of Parks and Recreation, I hear a lot about that. There's a lot of concern in terms of how resources are allocated. So I just wanted to mention that. Also, at the bottom, or excuse me, at the end of the first paragraph on page 7, there was $500,000 proposed for Community College of Philadelphia to help offset tuition increases. Can you discuss what those proposed increases were? Do you have an idea roughly of what they were?
Off the top of my head, I have to get that. Do you remember?
Just so we can have a number to go with it?
Community college. How much was the proposed tax tuition increase at community college?
Don't have it?
Councilwoman, from what we understand, that they haven't made up their exact number. That has not been proposed yet, but we're just hedging.
Okay. So, but as soon as we have that information, hopefully we'll have it soon, and we'll be able
Yes.
to know so that we can really determine if, how much we are able to be of assistance. Are we really helping people? Is it a drop in the bucket? If we really, really want to be helpful, then we need to know exactly what the increases are and be able to be helpful in that manner. So that was it. Thank you.
Thank you.
Thank you, Councilwoman. And the chair recognizes Majority Leader Jones.
You sure?
Yes, sir.
Just want to be sure.
Yes, sir. It's first day. We got a couple of glitches. First day.
Yes, sir. Couple of issues real quick. Number one, and this does not need an answer right away, but something that is on our radar. Because there is labor peace with the fire department, we want to ask respectfully that we consider that $3.8 million differential to stop the brownouts, so that, I know one had nothing to do with the other. However, if a rooster crows and the sun comes up, did the rooster cause the sun come up? I don't care. I just want to deal with the brownouts. So we would like you to consider, if we were to add that money back, that we could stop the brownouts. Number two, and more as important, we got through the dreaded 3 letters of AVI last year, and I want to give public accolade that that's probably one of the hardest things under my tenure we will ever have to do, and it was good leadership that, no, it's not perfect, but it is at least progress to where we were. The question I have is, under several theories, that some people believe that some areas were underassessed. And listen, I'm not complaining, but some people feel that some areas were underassessed. The question becomes for me, in a 5-year plan, if that is true, what is the process by which the areas will be reassessed? And I want to know that process, what portion of the city, where, and then how will that impact your projections? According to your consultant, IHS, that housing values are projected to go up 1.5 nationally, and according to your assessment, they're supposed to go up 3.5 in Philly. Now, are we that much more desirable than other areas of the country? I mean, I need to know how that has come to.
I'll answer the assessment process portion of it, and I'll let Rebecca talk about how we got to the growth projections. So once we get through the appeals process, the intention is to reassess the entire city each year. I'm looking at Richie to make sure that that's right. That's the goal.
So let me, for the record, we are going to, in 2016, have new assessments. So annually,
Yeah.
how many properties was it that we went through?
It's 570,000. But you won't see the kind of changes we saw last year. You'll see kind of moderate changes as the market changes.
Your consultant said we will go up 3.5, which is at least 2% higher than the national average.
So that, I'm going to, as I said, I'll leave that to Rebecca.
The 3.5% you're referencing was the original IHS. What document are you looking at? I just want to make sure that...
It's the 5-year plan,
Yeah.
and I'll give you page 25, I believe it is.
Right, the 3... I'm just looking for the 3.5 to understand that number. The 3.5 is where?
According to your consultants, IHS, national average, 1 point, let me put my glasses on. Page 17, I believe?
Oh, okay. Okay. Yeah, I just wanted to make sure that you weren't discussing a projection. That's the house price growth. IHS has their view on the housing market in Philadelphia is that there's a lot of pent-up demand, and that the volume of home sales as well as the prices of those home sales will increase significantly. They projected that a year ago, 2 years ago, that we'd have over double-digit growth in the transfer tax, which at the time we didn't go above 10% in our projection level, and it ended up that we finished last year at a 24% growth rate in the transfer tax. This year, we're seeing growth under 10%, about 8% so far, so it is lower this year. But it's still expected to be in the double digit for the transfer tax, showing that the value of both home sales and home prices is expected to continue to grow. On the real estate side, on the assessment side, what we've projected for assessment growth when the Office of Property Assessment begins to revalue all the homes in the city every year is about 3% a year in growth.
So the $1 million, more than $1 million question is, if we're projecting this much increase in value, so that AVI no longer is revenue neutral, it's revenue positive.
So what we said about AVI is that the first year was going to be revenue neutral, but then as values grew, you would see growth in revenue with the same wage, with the same tax rate. We never said it was going to be revenue neutral forever.
I didn't say you said it.
Yeah, I just wanted to...
Pointing out, underscoring, and highlighting that it is not. And that if we do this annually, and we do all of those at a modest 2%, you're saying maybe IHS is over the top with their...
No,
saying,
they've actually, I mean, they're pretty good right on with their projections. I think your point is that if the home values grow by 3% a year, and the assessments grow by that point, and we keep the tax rate steady, more revenue will be generated from the property tax. That is correct.
Well, is that reflected?
Yes.
Yeah, that's right.
So give me the actual numbers based on...
So it then also reflects things like abatements coming off abatement, so to the extent that there was new construction, things have been coming off abatement, that also increases the tax, the amount of tax we will collect.
All right, so if you could drill down into the numbers for me and say that if we, I'm sorry, if we drill down within the numbers, we can find out what that, because, and the reason I'm coming up with this is not just the wow factor of that our real estate picture is better, and the real estate fact that a lot of people are hit hard by ABI, but on top of that, we need to know that if we're going to, and some people would have us considering changing the millage rate and changing the split to the school district, this has major impact. And we need to really adjust the dials based on what your growth is, because there's a maintenance of effort that's impacted by this. And so, again, that is a very important detail of what our projected overall real estate value is.
Right. And I remember, we'll hop on page 26 in the plan. We have a chart that shows what we're estimating the growth in the base will be each year. And that's built into our projections. And we share those projections with the district, so the district uses the same projections that we use.
So, as we move forward, Mr. President, I think this is a very key factor that we, you know, as we start to adjust the dial for the school district, but also our operating budget split, that we need to be real clear about this. What we tend to do, and since I've been here at least 6 years, is that we lowball the revenue estimate, and I think you should be conservative in your budgeting. But what happens at the end of the day is we often are pleasantly surprised with the amount of revenues coming in. And we need to be real circumspect about how we do that as it relates to our budget, but also the predictability of the school district budget. And I would encourage, at least, you know, not at this session, but us maybe anointing some people to go work with them to really drill down to see what that really means over the next couple of years.
Yes. Yes, I just got a text from Mr. McKeithen. He said he can't wait until it's his time to testify for OPA to talk to you about that very important initiative.
Thank you, Mr. President.
I got the same text.
You got that text? Thanks. Thank you. Thank you, Councilman. You are so right. And at this time, the chair recognizes Councilwoman Brown.
I simply want to be absolutely certain, Mr. President, that I've made my request clear. So for those departments that I highlighted, I'm interested in those numbers that they're requesting from the City of Philadelphia, and a listing of all contracts, $250,000 or more. That's the ask. So I just want to be certain.
Divided by, is the request before divided by federal, state, local, is that?
Separate out federal and state dollars. I'm only interested in that which we have some say over, and those are the city dollars.
Okay,
Right,
I understand
okay.
now. Got
All
it,
right?
okay.
And for those contracts that happen because of city support, I want the listing of those contracts, all $250,000 and greater, for those departments that I stipulated. Thank you. Thank you, Mr. President.
Thank you, Councilwoman. And seeing no other members teed up for questions, I want to thank you all very much. And the committee will stand in recess until Tuesday, March 25th at 10 a.m. We will convene in room 400 at City Hall. Thank you very much.